Hello and welcome to London Property Podcast, the home of Super Prime. Today we're in conversation with the co-founder and CEO of CapitalRise, Uma Raja.
I always found CapitalRise really interesting because I really like these making things accessible to people in super prime, and the only other one I knew about doesn't actually do super prime and it doesn't do development. So I'm really interested in finding out more about it. Obviously, being in the industry, I've heard from various different parties who are involved in different ways with your company, but I'm looking forward to hearing it from you.
Great. So CapitalRise was founded by myself, Alex Michelin and Andrew Dunn. And Alex and Andrew are the ones that I guess came up with the idea to start off with. So Alex and Andrew are founders of a business, Finchatten. They're a very, very high-end property development firm. They've been going nearly 2 decades now, have done over 120 projects, delivered £2 billion worth of real estate under construction, over 120 projects, very successful business they've built as property developers, predominantly focused in the kind of prime and super prime space globally. And they realized that there was a massive gap in the market for finance for developers in general as a result of regulatory changes that kicked in after the financial crisis. But particularly underserved is the prime property developer market, which represented, them as developers. And in addition to that kind of gap in the market, also service delivery from traditional lenders was, typically very slow and quite a tortuous process. And as developers, there's this common feeling that kind of raising money and raising finance for your projects is one of the most painful parts of the development cycle. So they decided to found CapitalRise as a way of trying to kind of attack that need and build a lending business that was way more customer focused and, was very happy to lend to developers working in the prime and super prime real estate sector. So that was the kind of thinking behind the business. The other part, I guess, is how we fund our loans. So we have a range of different sources of capital that we use to fund our loans. And the thinking there was that historically, the only people that ever had access to this kind of caliber of real estate investment opportunity were either institutions or ultra high net worths, because the minimum ticket size to get involved was in the millions typically. So by developing a tech platform, which is, I guess, where I come in, my background is financial technology, and I've spent the last sort of decade or so building digital platforms such as a CapitalRise platform, that we were able to democratize access to these types of investments. And so by using our tech platform, we're able to fund loans. We do use institutions as well, but we do have a digital platform which enables smaller investors to invest in our loans. So that was fundamentally the idea, was to build a lending business targeting lending to prime, super prime real estate developers and different types of projects, and to fund them using a range of different sources of capital, from kind of traditional kind of institutions, banks, family offices, to, I guess, a more modern form of capital, essentially via our online platform.
And what percentage of the lending comes from the online platform? And presumably, that's kind of matched with or supported with high net worths or institutions that are already involved with you?
Yeah, so that kind of balance in terms of the funding mix changes over time as our loan book scales, as it has done. Like last year, we sort of tripled our volumes. Those kind of metrics change, but typically about 3/4 of what we do is funded via the online platform, with around 1/4 coming from, other forms of capital. But again, as the business scales and we're doing kind of larger and larger loans, we will need more of a balance of institutional capital to do those kind of larger ticket loans.
And what's the average investment that people make from the platform?
It really varies. So we've got the minimum investment's 1,000. Probably the biggest single ticket that a platform investors put into an individual loan is around 500,000 into a single loan. And it really, so anything between that sort of 1 and kind of 500,000.
So for a banker who's making lots of money but doesn't necessarily want to buy, and he's young and he's getting bonuses, it's a really good way of having a headache-free foot on the property investment ladder.
So, yeah, the way we look at it is obviously your underlying investment is investing in a property loan. That loan is secured against prime real estate. So if the borrower is unable to repay the loan, we have, via the way that it's structured, first legal charge, we have access to that underlying property. So if they're unable to repay the loan, we could force the sale of the asset in a worst case scenario. We've never had to do it, but we know, I guess the benefit of this is that it is secured lending, so we could if we needed to. And then you sell that asset in order to repay our investors. And the returns are very, very attractive for the level of risk you're taking. So our returns are between 7 and 12% per annum. Just to give you and our average that we repay to date is around 9.5% per annum. Just to give you an idea of the metrics we've repaid. In fact, we're processing a redemption right now as we speak. Like £2.4 million is going out to our investors today on one of our investments that's matured. But to date, we've done over £32 million worth of kind of redemptions back to our investors. We haven't missed a beat, so we haven't had any losses, no defaults since inception. And average rate of return is around 9.5% across all of those redeemed investments. And the average loan term is between 16 and 17 months. So each investment has a relatively short duration. And I think the other benefit is the ISA. So those returns can be tax-free if you invest using your ISA wrapper. So we have an innovative finance ISA. And many of our customers, in fact, I would say the majority of investments that we process are via the ISA, because obviously it's very attractive if you can get those sorts of returns tax-free.
And then, so getting a development loan, traditionally before CapitalRise, you'd go to certain banks that specialize in a development loan, and then they had their lending criteria. So would you say that coming from the background that you come from, you are able to be a lot more creative with your lending criteria?
Yeah.
Is there something that is kind of unique to you and your position compared to somebody going to a traditional development finance bank?
Yeah, absolutely. So I think there's a couple of things probably to talk about. One is, as you rightly mentioned, developers are at the heart of this business. Developers set this business up because they felt that the service that they got from traditional lenders was very poor. So we are very customer centric in terms of the way that we approach our lending. We very much look at it from the borrower's perspective. And I think one of the issues with a lot of the traditional lenders is they have a very much a sort of tick box approach. If it doesn't fit in this box, we just can't deal with it. Whereas we will look at it as a developer would, and we'd look at it in the round. So tell us about the project. What are you trying to do? What are the challenges? How are you approaching that? If there are issues, if they found a great solution and we believe in that solution, then we can get comfortable with it too. So we're very much more kind of entrepreneurial about the way that we look at all the projects, very flexible. The other thing that's really important to note is that we are a specialist lender that are focused on a very specific niche of the property market. And since we launched this business, 4 or 5 years ago, still today, I would say we are still the only specialist property lender in the market that only focuses on prime. So, we do not serve the mainstream market. We do not serve the low end property market. Yes, there are a couple of lenders that will lend to prime developers, but it's as part of an overall mix. And one of the issues with that is that often they're just not really that comfortable with the asset class. And often they will, for example, some of them will say, oh, actually, you know what, if it's more than X £1,000 per square foot, we don't want to do it. If it's a cap value of over X, then no, we don't lend, because they're not comfortable with, this particular niche of the market, which, let's face it, has its own unique dynamics. It is not the same as the rest of the mainstream property market. It is different. And you do need to have that deep expertise to understand it well, to underwrite it well, and to maintain the sort of track record that we have. I think that's a testament to the fact that we do have very deep knowledge in this very specific niche that we focus on. So that does mean we have an advantage against other lenders, because we understand this part of the market, I think, better than anyone, because of the heritage of our founders and this deep expertise we've got in this niche.
Yes, no, I totally agree. Sometimes it's like when you're pricing something, if you have access to the profile of the buyer you're looking for, you're going to always be a lot more enthusiastic about the value of a property than someone who has no idea about how to find that kind of buyer. Then they always market things cheaper. So it goes the same way, I guess, with you guys, that you feel much more comfortable than any regular lender. But does that also mean that you're able to be more competitive with your rates?
Yeah, it is, because again, some of them will say, well, we're not that comfortable with this part of the market. We don't really understand it as well. So we'll only do it if, X, Y, and Z is satisfied. And that might include, the pricing is, out of the market in terms of, much higher than what you normally expect. As an example, we offer both senior and mezz loans out to the market, and our mezz pricing, when we look out and we compare it with our competitors, is probably the cheapest in the market. We are very competitive. And that's another interesting point as well, actually, which is, I guess, how we work with the existing lenders in the market. So quite often we'll partner with senior banks who are happy to do some lending as long as the leverage is incredibly low. So, for example, quite a few of the loans that we've done, they might be on quite high cap value assets. For example, we did a loan on a £50 million townhouse in Holland Park, for example. And on that one, we partnered with a senior lender. They did the senior portion, a leverage they were comfortable with, not very high. And then we essentially topped up and provided the borrower with a mezzanine loan to get them to, a relatively decent amount of leverage. So that's the way in which we can, I guess, work with some of the incumbent lenders to together offer our borrowers, a better proposition than they would have got otherwise.
So I would imagine that those lenders also feel more confident when you're involved, because that they know that you're dotting the I's and crossing the T's a lot better than they are equipped to do.
They do. And they get a lot of comfort, I think, from knowing that, Alex and Andrew and the rest of the team here are behind that underwriting team, that we are doing the due diligence. And we know, from a day-to-day basis, these guys are in the market, they're developing property, on a daily basis. They understand the market better than a traditional lender sitting in an office in Canary Wharf might do. But also it means we've got expertise if things go wrong. So that's incredibly powerful for a lot of our institutional partners, which is, it hasn't happened yet, but let's take the scenario where we're funding a development and for some reason it all goes pear-shaped midway through. Then, you need a way of, trying to salvage the project in order to repay all your investors. And what's unique about us versus a traditional bank lender is we have a property development sister company and, founders who are developers. So we would know exactly what would need to be done. We would have that in-house expertise to know how to go about stepping in, completing the development, and then going to force the sale of the asset in order to recover funds for our investors. So that's something that's quite unique as part of our offering that offers a lot of comfort to our investors. That in a worst case scenario, we are better equipped than others to try and solve those problems.
So you're mitigating the risk for them. And a lot of times these things become expensive because they take longer than planned. And you'll be able to step in and try and minimize that delay.
So, we have always, with all of our loans, we have step-in rights. And that's something that's very important for us. And we would absolutely use that if we needed to. If, for example, things didn't pan out the way they were supposed to. Yeah, it's very important.
Yeah. Now, in this market that we're in at the moment, it'll be interesting to hear from you. What type of people, there are obviously developments still going on. How many developments do you generally tend to have running at any one time?
Yeah, so I guess at any one time, we're probably funding between, 10 to 15 live developments. And we do bridging loans as well. But I would say kind of probably 10 to 5 kind of live development, 10 to 15 kind of live development projects. And the rest would be in kind of bridging loans.
And I've noticed that you're doing things in sort of super prime locations, but outside of prime central London now as well. Is that something that's starting to show as a way forward at the moment, with everybody wanting bigger houses, bigger gardens?
Yeah, so I guess when we first started the business, probably the first maybe 12 months of lending, I'd say probably nearly all of our loans were in kind of prime central London. And then sort of over the kind of last few years, we've sort of expanded, I guess, and we serve the broader prime market. So my book is split between prime central London. So that's where we're going to pick up loans in, for example, we did 3 loans in Chelsea in the last couple of months, but, Belgravia, Mayfair, Knightsbridge, Kensington, Chelsea, those kind of locations. Then we've got prime outer London. So that's where we're targeting locations such as Hampstead, St John's Wood, Wimbledon, Richmond, those kind of areas. And then prime home counties. So that's where we're targeting loans in areas like Wentworth, Windsor, Ascot, St George's Hill, Radlett, Elstree. We've got a project there at the moment. So we serve the kind of prime regional market within the southeast, prime outer London, and then prime central London. And in terms of the balance, actually, we've seen a real mix over the last, during 2020. We're still doing seeing a lot of deal flow from prime central London. Now is a very attractive time to be buying assets if you're a developer and you're in the market. Again, I'll talk to you a bit about kind of PCL market and what's been happening and why the conditions are so strong. Prime outer London, again, seeing a lot of volume there. As you say, people starting to move out, looking for more space, looking for more outdoor space. And I think the prime home counties market it's already showing signs, but I think it's going to be incredibly buoyant as a result of COVID. Because I think a lot of people are accepting now that probably remote working is here to some extent for the future. And so they aren't going to need to do those 5 days a week commute into the city. So why wouldn't they move a bit further out and accept a longer commute if they know they're only coming in a couple of days a week? So definitely you're already seeing that behavior impact the market. But not at the extent that, not to the expense of prime central London, seeing a decline.
So if somebody brings you a project now, I guess one of the interesting questions would be to ask a developer, who are you developing it for?
Mm-hmm.
What's the target market? Has the target market changed, or is it still the same?
So, again, for example, we have a podcast, which I love recording, actually. We speak to various different people from within the industry just on kind of what they're seeing in the market.
Yeah.
So I recorded, I think last episode was last week. It was really interesting. So we're talking to an agent in the prime real estate market. And I think, and again, I was to kind of like Frank and Savills to see what they were seeing as well. And I think what they're seeing is that, it's the same kind of clientele, be that local, very wealthy individuals looking to acquire and develop assets in, the kind of, and developers in kind of prime areas. There's obviously the continued demand from international buyers and investors, albeit when I was chatting to him last week, he was talking about that sort of the balance is slightly shifted, I guess, because of the travel restrictions, that there seems to be more kind of domestic interest versus international, kind of that balance is slightly shifted in recent times. But yeah, we're not seeing that it's a sort of dramatically different profile in terms of the people that are involved in the sector. I think what is changing is some of the requirements. As a result of, I guess, having been locked in our houses for several months, it's forcing people to, rethink and maybe accelerate some decisions that they were thinking of doing in a few years' time. They're like, you know what, let's do it now. Let's take the plunge and make that decision to move to get whatever it is, to move further afield or let's bring our parents closer to us because we don't want them, X hours away. If we get locked down again, I want them on my doorstep. Maybe I'll buy a pied-à-terre in central London close to my office. So I'm within walking distance of the office. So on those 2 or 3 days a week when I go into town, I've got a little bolt hole there that I can use. So I guess what we're seeing is we've seen a massive spike in demand for finance in this year as a result of COVID, really. And I think that's the residential real estate market is going to continue to see, I think, a lot of transactions, a lot of activity because of people making decisions as a result of what they've just experienced. Yeah. So I think one thing that's very interesting at the moment is the pricing, that the prices that borrowers can acquire sites for at the moment is very attractive and provides for very attractive, kind of very profitable projects for them. So if you think about prime central London as an example, PCL prices have been in decline since the end of 2014. They're now, 20% below the peak back then. So, and then you add to that the fact that because of COVID, they're in a very strong position as a buyer. Often they're then even, they're able to chip the price even further just because of the current dynamics. So we've done a lot of bridging loans, in the last probably 5-6 months, which have been to help developers just acquire the site initially, and then, in some cases, and follow on with the development finance. And they're all very, very attractive appraisals when you look at them and the level of profitability that the developers expect to get because of where PCL is, relative to its property cycle, which, interesting, is a very different situation to the mainstream property market. Prime Central is in a completely different point in its cycle to the rest of the market.
When they buy it, they've got to transfer it into, how does that section work?
So we create an SPV for each individual transaction we do. That SPV is making a loan out to a borrower. And as part of that loan, we are getting security. And that security includes, a first or second legal charge over the property. So we don't own the property. The borrower is buying that property. But we obviously have property security in the same way as you've got a mortgage from a bank.
Right.
And so the SPV is the beneficiary of all of the property security. There's usually additional security. We will probably we normally get a personal guarantee from the borrower, and there'll be other elements of the kind of security package for each investment. And then the SPV will raise funds from investors, and it does that via issuing bonds, which are essentially going to be secured against the underlying asset using that structure. So in the event that the borrower was unable to repay the loan, we could enforce on our security package in order to force the sale of the asset in order to repay investors.
Got it. And then the other question I had for you, so if somebody came on your site and wanted to invest £1,000, what is that procedure that they've got to go through in order to be vetted and qualified and pay the money over?
Yeah. So to be eligible to invest with CapitalRise, you need to be a high net worth or sophisticated investor. So you would have to come to the website and go through our onboarding process. It's all online. The whole process is completely digital. So you'd go through a kind of online form where you'd have to tell us what type of investor you are, so we can check you're in eligible category. You would have to give us all the normal stuff you'd expect, so kind of name, address, date of birth, etc., so that we can do our KYC, know your customer, and AML checks. We would also need you to fill in a little questionnaire just to check that you understand what you're doing, and that it's an appropriate product for you, so you understand the risks that are involved, and that this is a potentially suitable product for you. And then once that's done, we do our KYC and AML checks all automatically. You're then onboarded, and you're able to then view investment opportunities, and then invest. And should you decide to invest with us, all the information for each of the opportunities is displayed on the website. You can come in and say how much you want to invest. All the kind of paperwork essentially is all done online. So you sign all the documentation digitally, and then you just wire funds to us. And we create an e-wallet for each customer. As soon as you wire the funds to us, they'll appear in your e-wallet. You'll get real-time notification that funds have arrived. And if you've already decided what you're investing in, then that will just go straight through. And towards the end of the day, that will be processed and your investments will start to earn you a return.
Fantastic.
It's very slick, very, very quick process.
Yes, and very attractive return. So you're saying that it was between 7 and 11% you've had since you started?
Yeah, between 7 and 12.
7 and 12. Fantastic. Mm-hmm.
Since inception. Types of borrowers that we're dealing with are, very experienced borrowers. They've been in the market for many years, and we wouldn't take a risk with somebody for whom this is their first or second or third project. So typically we're dealing with, very well established property developers who obviously specialize in our part of the world and our part of the market. So they've got a brand that's associated with delivering high spec, high quality real estate in the sorts of postcodes that we deal with. So no, we don't get a lot of that. One thing I would say, actually, which I probably should have mentioned earlier, and again, this is something that I think is quite unique for us, is that as founders, myself, Alex and Andrew, we put our own money into every individual opportunity that we put on the platform. So we invest in every single loan. We're also a credit committee and we're sanctioning every loan. So that's one thing that, you won't find in a traditional lender or in a bank, for example. And I believe that's really important because I think, ultimately we are the decision makers and we would never therefore put anything forward for funding that we didn't feel 100% happy with ourselves and, be 100% happy to invest in personally. And that sort of having some skin in the game, I think, is very, very important for us as a lender and offers our investors, both our online investors and our institutional investors, a lot of comfort.
Yeah, no, I bet. Putting your money where your mouth is. Absolutely.
Yeah.
Okay, fantastic. I think that's it. My colleague Henry's been listening. I don't know if he's got anything to add.
Hi there. Yeah, I've just been listening quietly. Very interesting. Really interesting. The one thing that strikes me, I think it's always nice to hear a bit about the start of the company, and it strikes me that this was a novel idea at a difficult time when financial regulation was a bit nuts when you started. What was that like, that to set up a platform like this in that space at that time?
Yeah, I mean, I'd say from a regulatory perspective, the last few years have been very dynamic because this is a new sector. And, the regulator is having to sort of observe what's going on, learn from what's happening around and adapt and change to make sure that customers are protected, as new platforms come on board. And unfortunately, some platforms don't succeed. So I think the key thing for us is it's been a very dynamic environment that we launched in. And that's and I see that will continue. So I think what it means is that you have to be very flexible. New rules can come in at very short notice that you then, have to adapt to very quickly. So the importance for us is to kind of maintain our agility. And in a way, it's probably good for us, right? Because, when you're a young firm, you're naturally quite flexible and fast moving and quite agile. So I think, it's worked very well for us that we kind of kept that culture, even as we've scaled and we're doing more and more loans, we have more and more customers. We've kept that sort of very, the ability to move at pace so that we can react to changes as they come. So a good example is in January this year, some restrictions were brought in that changed the types of investors we were allowed to market to. And so prior to January, we were able to market to a much broader group of investors. And now, since January the 1st, we're only allowed to market to high net worth investors and sophisticated investors. And that piece of regulation came in like at the end of November and needed to be implemented by the 1st of January. So it was a very, very quick turnaround to adapt business, adopt all over Christmas, doing New Year's Eve, so that everything could be ready on January the 1st. So you have to be able to react very quickly. Yeah. But if you have a very robust business model, then you can manage things very well.
Mm-hmm. Mm-hmm.
Does it matter what country people are logging on from?
So, I mean, that's an interesting point. So it's one of the things I think makes the platform very attractive. Now, we only really market to the UK, to UK investors, but obviously we have a digital platform. So it can be, people can find us from all over the world, wherever they're Googling. And we have got, international investors on board. We serve the UK market, we serve the European market, and we can serve certain non-UK jurisdictions. It very much depends on the country and the level of, I guess, financial risk involved in certain jurisdictions. But yes, we can serve certain non-UK markets. And that's amazing, right? So, for example, we have an investor, for example, who invests quite a lot with us, is based out in New Zealand, for example, and, found us online, just thought, wow, you've got a property in Eaton Square. I'd love to get involved. I know the location. I went to the university in London. I know the location very well. And from from my mobile phone, sat on my sofa, I can do all of this. No hassle at all. And we've even got one investor, for example, who travels around on a boat for a lot of the year, and he loves that everything can be done via his mobile as long as he's got some sort of signal. He can invest. He can see his portfolio. He doesn't need to be faxing paperwork, or it's very, very slick.
Well, that's the thing about super prime, isn't it? It's like, so long as you've got a proximity to Harrods, a lot of people know where it is.
And that, I guess that's one of the things that makes our type of product very attractive. You know, you can invest in a project on the Strand, in Knightsbridge, Mayfair, like iconic locations that are known, all over the world. If you've ever played Monopoly.
Yeah, exactly. You can buy the Monopoly board. Well, listen, thank you so much for your time, Uma. It was really, really interesting.
Well, I hope you enjoyed that as much as we did. If you have any questions or you'd like to be put in touch, please email us on info@londonproperty.co.uk.